Hey everybody, Marty Mazar. Good morning, 19th of March 2016. Just to look at the charts, I promise to try not to keep you too long. This is the 1 year chart. As I keep suggesting, technically we just keep getting better. Here's the market breaking through the 50-day moving average. Here's the 50-day moving average changing its direction. Here we are breaching the 200-day moving average. This is the S&P 500, by the way. These are strong technical signs that this market is looking healthier, technically speaking, by the day. I keep having to bump up this level of resistance to catch. Here I did to catch Fridays. If we get to a point where we can exceed these lower sloping highs, that also becomes bullish, and then we really threaten last May's all-time high for the market. Now, having said that, I keep telling you, I have the last few days, that the market looks overbought to me. Now, I thought I'd share with you why I say these things. Let me introduce you to a couple more indicators. This one is the MACD line. That stands for Moving Average Convergence Divergence. Now, I did introduce you to this, and I offered it somewhat of a definition a few weeks ago as it related to oil. We had a pattern that looked like this. Oil was trending lower, but the MACD line was trending higher, which showed there was some underlying momentum that we should pay attention to that wasn't reflected in the actual price of the commodity. And I said that's a strong technical sign that maybe amid a lot of bad news for oil, maybe there's an uptrend coming. It must have been the next day when oil bottomed and has moved substantially higher. Well, same thing was happening in the stock market. And here I was telling you we looked a little oversold, and sure enough, we bounced back. I don't think I anticipated the strength of the bounce, though. Now this indicator is beginning to top out a bit, even though the line looks pretty steadily to the upside. This is a signal that underlying momentum is beginning to wane, and it's showing up a little bit here in this histogram as well. Plus, the relative strength index is flirting with 70, and that's an overbought position as well. And so let me show you one more. And let me add in these bands. So we're also 2 standard deviations above the 50-day moving average. That's what happens when you break this purple band. That also can be a very strong technical indicator, as it was here, that the market is oversold and we're due for at least a near term and maybe short run sell-off. Again, folks, I do like the technical underpinnings. The fundamental underpinnings look pretty good. The Fed helped out immensely, as I said in the written blog. So, and we're long-term investors, and I'll remind you every time, this is just me helping you make sense of the short-term volatility. This is nothing actionable for patient long-term investors, I promise you. So on the shorter term chart, the 60-day, 60-minute chart, let me get to that. Okay, so leaving these bands up there, you can see we've come up above it and then came off of that a little bit. We've stayed within this upward sloping wedge pattern, which is also something that suggests there should be a downward near-term bias for the market. When you look at the moving average convergence divergence, even more so than on the 1 year chart, that signal line and the white line are about to cross, which would be a short-term bearish indicator. You can see it here in the histogram as well. And on a RSI basis, you can see we've already breached 70. We're pretty much right there as well. Folks, these are just indications that in the near term, the market may see a pullback, and after 5 weeks of really nice rally, I think it's overdue, and it probably would be very healthy. So, I think that's enough for now. I've got, of course, you're not going to be wanting for information from me in the days and weeks to come, and it's going to be very interesting as 2016 unfolds. I still think, even though the stuff's improved, no question, on a fundamental and a technical basis, there's so much going on this year that at best it's going to be unusually volatile. And I'll just leave it there for now. Have a great weekend, folks. Thanks as always, and I'll talk to you very soon. Bye-bye.